today's session, we are seeing EURUSD struggling on the higher side, and it looks increasingly likely that we might see a breakout below 1.20 level, and that is going to open up the further possibility of a decline all the way towards 1.195 in near term. And if you look at the data docket for the day, the major market mover has been, of course, the Bank of Canada's interest rates announcement. And here, as expected, the Bank of Canada left its interest rates unchanged at 0.25%, but it has curtailed its asset purchase program. It has now said that it is going to reduce the government bond buying to Canadian dollar 3 billion compared to the prior rate of Canadian dollar 4 billion. And this is happening because the Bank of Canada sees the economy on a much better footing, and it has also upped its inflation forecast, and it expects the inflation to touch the higher band of 3% in the coming year. And also, it is now looking at the possibility of starting to raise interest rates in the second half of next year compared to the earlier anticipation of 2023. So that has pushed the CAD quite higher compared to the other major currencies, and against the USD, it has appreciated almost 150 pips. We are also going to take a look on the technical aspects of it. So we will talk about the trading opportunities there also. Earlier in the day, we had also got the inflation numbers for the Canada, and here, as expected, the inflation reading for the month of March is higher, and it has overshot 2%. Now it stands at 2.2% in terms of year on year for the month of March, and prior to that, we had also the inflation data from United Kingdom, and here also there is uptick in the inflation rate. Now it stands at 0.7% compared to the prior month's reading of 0.4%. So in the case of UK, the inflation is not still that pronounced, but of course the trajectory is higher. Just a while back, we got these US EIS crude oil inventory data, and contrary to the expectation, we are experiencing rise in the crude oil inventories by more than 500,000 barrels. And here, anticipation was that we might see a decline of closer to 3 million barrels, but that's not the case. And if we consider the light crude oil's reaction to this release, we have seen muted action on the charts, and for the time being, it is holding up above the US dollar 61 level, and I think it is now trading above even US dollar 62 level. But the near term outlook still remains bearish, slightly in correction mode. But we are not really looking at the technicals of that. For today's session, the focus is going to remain on the currency space. And here, first, we will consider the Euro USD, and then we will be considering the USD CAD. I think I forgot to change the name here, and it is written DJIA, which stands for Dow Jones, but we are not really looking at Dow Jones in today's session. Let's start with the Euro USD technical outlook. This is the daily time frame chart, and after rallying all the way to 1.207, we are seeing some correction happening in the Euro USD, and I think this is pretty much natural after this strong rally of almost closer to 400 pips. Some correction can't really be ruled out, and this might be the time to look for some shorting opportunities whenever we see the Euro USD closer to the resistance level. And in due course of time, I am expecting the Euro USD to even retrace toward these crucial level of Fibonacci retracement 38.2%, and that is likely to open up the possibility for trading on the short side till we have reached the 1.193 level for the Euro USD. Of course, we will have to look for the trade optimization, where the focus is also going to be on such entry points where the risk should be minimum. So if we consider today's price action so far, we have seen EURUSD holding above these first resistance of this month's pivot point series. So for any substantial move on the lower side, we will of course need a breakout below this level, which is likely to act as the near-term support. And this is the price area where we had seen the EURUSD earlier struggling before this breakout and then rallying higher. And now this is pretty much likely to provide some support on the lower side, but we don't really have to be too concerned as long as EURUSD is holding below the 1.205 level. And in today's session also, I think that is the price level, this yesterday's consolidation phase level, which is going to be crucial. So unless and until we have a breakout on the upper side of that, we can continue to look for shorting opportunities as and when Euro USD gets there and consolidates, and only after that the opportunity will arise for fresh short trades. So if we have to look at the entry points for today's session, I think these immediate swing lows around 1.203 should be good enough for any entry for Euro USD short, where the target at the bare minimum can be kept closer to the immediate support level, as I explained to you on the 4 hourly chart. Also, we have support in place on the this level, and because of that the euro usd might not decline straight away, and rather than that it might spend some time before any possible breakout on the lower side. So for the time being it will be better to adapt the scalping kind of approach, where the entry point can be anywhere closer to 1.23 after due consolidation, and in due course of time these prior swing highs can be retested. So we have the target at the minimum closer to 1.199. So that gives us the opportunity for target of around 30 to 40 pips while keeping the stop loss at a fairly low level. I think a 15 pip stop loss of around 1.2045 should be good enough, just a little above these 50 SMA. And as long as that level is not really reached, we can continue to look for shorting opportunities in today's session. Now moving on to the USD CAD. Here, there is the daily time frame chart, and prior to the release of Bank of Canada's monetary policy announcement, it was looking like that we have this head and shoulder pattern in place for the USD CAD on the lower side, and this might be the time for the USD CAD to start appreciating and go all the way toward this immediate swing high, which is there around 1.27. But that didn't really happen, and after the hawkish stance of Bank of Canada, I'm expecting for next couple of days also the CAD to continue to appreciate, and that is likely to push it even further below these immediate swing lows around 1.245. And in due course of time it can even be expected that we might see these lows established in the March to be retested. So that opens up the possibility of shorting the USD CAD. But of course, given the fact that we have already seen substantial move in today's session, it will be fairly difficult to look for the fresh shorting opportunity while keeping the stop loss sharp. But still, if we are not really fortunate enough to get the entry in today's session, but I think in next session or the session after that, we will of course be able to profit, provided we continue to trade with the trend, and depending on the price action, we can look for shorting opportunities. So in today's session, we have this breakout below the support level of the central pivot point, and in near term it can be expected to act as the resistance on the higher side. So for today's session what we need is the USD CAD to continue to hold below this central pivot point, which is there around 1.24 sorry 1.255. And if we see that this close happens below it, then we will have more reasons to believe in these resistance, and in next session, that is tomorrow, we can continue to look for short sell as and when we find the USD CAD closer to these resistance level. If you consider the regression curve, it has been flat for last couple of weeks as we have this muted price action in the USD CAD where it has lacked the momentum on either side and it has traded in a very narrow range, but that might be changing fairly soon and we can expect a breakout on the lower side and in due course of time the first support can be reached by the USD CAD. I think I have included this chart wrongly for USD CAD. Instead, it is USD JPY. So here we will have to rely on this chart only for pinpointing the entry point. And as I explained to you, it will be an opportunity for us if we see USD CAD consolidating below these central pivot points. So let's see how the price action unfolds in today's session, and then whenever we have some retracement and consolidation below this level, the trade can be looked into, and the stop loss of around 40 to 50 pips should be good enough. Any a stop loss below 1.26 should be good enough, but that is going to be fairly wide if we go for the trade right now. But instead of that, if we wait and allow the retracement and then do consolidation to happen, then I think it will be a better opportunity. The risk reward ratio is going to be in our favor, and the minimum target, which can be kept for the trade, are going to be closer to 1.24. And if things continue to remain strong for the cat, then I think even this level is likely to not provide much of a support, and we might see a breakout below this level also in coming sessions. So with this, the market movers is also coming to an end. And if any of you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading the financial instrument, and one should be careful while using the information provided. A fabulous day ahead. Do subscribe to the Decoscope webinar channel. Thank you all. Goodbye.